Every major economy in this world today is going through a debt crisis. So when we look at, how much is the debt owed by the nation, then we realize, how difficult it is for future generations to pay back. So it is hard to quantify in terms of, how do we measure it comparatively. So I came across this chart which actually compares the debt to GDP ratio amongst the major economies in this world, and you'll be surprised to see how these countries are ranked. So let's just take a look at it. So on top of the list, Japan. So this is comparing the change in debt to GDP since 2000. So year 2000, the Japan GDP, debt to GDP ratio was 135.6%. Now it is staggering 251.9%. Blowout number, okay? A blowout number in terms of how much this nation owes to the public in terms of the government debt. Now, this is only government debt. It doesn't take into consideration the public debt, which is basically the household debt as well as the private corporation. Now, there is a difference between the government debt and the public debt, because the government debt is different because the government can always print more currency to pay off that debt in their own currency, but only in their own currency, okay? If it's a currency denominated in another currency, then it's not that easy, okay? So in terms of the private debt, you cannot print money. So the households, the corporations, they cannot print money. So they must pay back that debt by producing more goods and services. Now, if we go through the list again, we can see Singapore, which is a shocker to me because I always thought Singapore is one of the best performing economies. But when you look at it, their debt to GDP has grown exponentially as well. So back in 2000, it was 82.3%. Now it is 168.3%, almost doubled in the span of 2 decades. UK was also very surprising, 36.6%. I think that was one of the best debt to GDP ratio back in 2000. Now it is over 100%. Okay, look at Greece. From 104 to 160, France, Portugal, Spain, Slovenia, Finland, Croatia, and Canada. Look at Canada. So Canada back in 2000, it was also very worst. Situation with Canada back in 2000 was also not good. So their debt to GDP ratio was still very high, 80%. 80% is still very high in 2000. Now it is 103%. So of course, it's not like 160 or 126%. Much better than, for example, US, Singapore, and Japan, but still it is higher comparatively. So only 3 countries, they actually were able to reduce their debt to GDP ratio: Belgium, Israel, and Iceland. And the way you can basically reduce your debt to GDP ratio is basically two ways, right? Number one, you grow your economy, you increase your GDP, which will help you to pay off that debt. Okay, that's one way to do that. If you cannot grow your economy anymore, that means you have to inflate away your debt, which means the government will continue printing more money to pay off the debt. So basically, the money printing itself is issuing more debt. So the money is created through lending into existing. So the government will continue to print more money, lend more money into the market, and it will help them to pay off the previous debt. So they issue more debt, new debt, to pay off the previous debt. That's what it calls inflate away the debt. So 2 possibilities: either you outgrow your economy to pay off the debt, or you inflate away. And according to some historical economists, if the sovereign debt, which is the public debt, if it goes past 60% of the GDP, it becomes practically impossible to pay off the debt. Okay, majority of the economies who has gone past that stage, they were not able to pay that debt and they went default. Okay, so now the question is, much of that debt which outgrew the GDP, it happened in the last 4 years since COVID. And look at this chart, which actually shows you the size of the share of the global debt held by these countries. The top 3 ones are Japan, China, and United States. And what IMF is predicting is also the same thing as I mentioned, right? So the governments can also go default. Okay, more than half of the world's government have defaulted since 1980s because they were not able to pay back their debt, because their debt to GDP has gone past 60%. Once it has gone past that stage, it's very, very difficult to pay back. US is in a different situation because US has the global currency, global reserve currency. They have monopoly on the global reserve currency. So they are different than any other nation. But other than US, it's not that easy to pay off that debt, because even if you inflate the currency, okay, if you debase the currency, printing more money, it will going to increase the inflation. Okay, so you are basically issuing more debt at the cost of your nation's purchasing power. So when you debase your currency in order to pay out that debt, you're actually making inflation, and you're making your future generation much poorer going forward. In Canadian perspective, if our Canadian government is not able to pay off that debt, then what they will do is either they outgrow the economy, which is very difficult in these circumstances. So the only option is to inflate away that debt, which means they will debase the currency, they will issue more debt to pay off the previous debt, which is going to increase inflation, which is going to reduce our Canadians' purchasing power, which means our future generation is going to be much poorer. Okay, that is a very serious concern, and I can tell you, majority of the Canadians are not even aware of that situation. They're keeping their head buried in the sand, and they think that the government will help them, the new prime minister will help them. Guys, this is not a easy solution to fix. If someone wants to fix it, they have to go through painful decisions in terms of austerity, which means cuts, government funding programs is going to be reduced, and there will be more pressure to generate more economic growth through private sector. Okay, so it's not easy problem to solve. The Canadian has to go through tough economic times if we want to bring it back on the track so that our future generations are not screwed anymore. Okay, otherwise we're actually bring the productivity, the purchasing power from the future into the present, which will make the future much more poorer and difficult for our future generations to survive. Anyway, you let me know what you think about that. Put your comments down below. Let me know what you think about that. If you like this video, give me a thumbs up, subscribe. If you are new in investing, there is a link in the description where you can start your investing journey through Questrade, which will give you extra free credit if you use my referral link. So happy investing, and I'll see you in my next video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Sorry for the interruption, guys. Just wanted to let you know that we have a team of realtors which is covering the entire GTA as well as some outside areas as well, like Brent region where I am based off, and I help out the clients in this region as well. So if you have any needs with regards to real estate transactions, buying, selling, investing, renting, let me know. There is a link down there where you can book a one-to-one consulting call with me, and we will be more than happy to help you out.